Okay, guys, hello and welcome back to Bright Founders Talk from Demi, an international software development company that designs, builds, and delivers software for sustainable businesses and promising startups. Today, guys, we've got with us Robert Crowell, co-founder and CBDO at Silverflow, an experienced executive and founder with a demonstrated history of working in internet payments industry. First of all, Robert, hello. Thank you so much for coming on. How are you?
Yeah, good. Thanks. Thanks, Matt, for inviting me here.
Good. Robert, we just spoke really quickly before we started. Explain for me your second name just a little bit better than I did.
Well, it's a Dutch name. So in Dutch, you would say Kraal, but it's easier in English to pronounce that Kraal.
I guess it's quite rare you get someone be able to get it spot on. Yeah, not so often.
Exactly. Only Dutch people will get it usually.
Exactly. Robert, let's get into the world of everything that you're doing. But what I want to do before we start, though, tell me a little bit more about yourself. I want to know who the man behind the machine is, so to speak. So tell me just a brief background of who you are and what has brought you to where you are today.
Good. So Robert Kraal, I'm 48 years old. Live in the Netherlands, obviously. I got two grown-up daughters, and I started my career in payments actually straight after my university. I originally studied geophysics, and a good friend of me, he studied physics. He was 1 year ahead of me essentially, so he left school university a little bit earlier, and he started this company with his brother, which at that moment actually was not a payment company; it was more a billing company. And when I graduated, he said, "Okay, would you like to come and have a look?" And as a geophysicist, of course, you're not really into payments, but you do develop software and you do model and you do a bit complex stuff. So I went to look there, and it was at the early days of internet in 97, 98, that area. And that's how I actually rolled into to the payments itself. And I'm not sure how much time you want me to spend on this, but that company was a company called Bibit. We sold Bibit in 2004 to Royal Bank of Scotland. RBS also acquired a few other companies, including WorldPay, Streamline, NetWest, and actually quite a bunch of others over the last decades. But to a degree, you could say that the WorldPay of today has a part of the old Bibit code, and perhaps they still have some of the code, but definitely we're at the root of building WorldPay as well, which is one of the largest payment companies. After WorldPay, I joined Google. Initially, I joined them to help them launch their payment products in continental Europe. But in all fairness, the product, and we're talking about 2006 now, the product was not really ready for the European market. It was quite a US-focused payment product. So I was heading up the retail, education, and entertainment verticals for Google, particularly focusing on the Benelux. So as part of the management team there. And that essentially in that time was convincing the brick and mortar, so the old-fashioned retailers, to do more with internet. Just instead of listening their opening hours and their locations, and also helping the already quite established pure e-commerce retailers as well, but getting more visibility. Great time, lots of fun there, but not so much payments.
How long were you there for?
I was there for about 2 years, but I want to get back into payments again. So I joined a company called Triple Deal, which was in the process of being taken over and reformed by Data. I was their COO, I think all the internal operational things, risk, legal, compliance, tax support, transfer reconciliation, HR, all that stuff. And I also was responsible for the financial strategic partnerships. So as a payment company, you buy in payment products from banks or from alternative payment methods. So typically all the larger Dutch banks, we would buy in their payment product called Ideal, but you also work with other banks for your credit card acquiring, and with the likes of PayPal and many other payment methods. Essentially, you make it easier for internet retailers to accept this whole wide landscape of different payment methods without those retailers actually having to know about the different technologies that the banks use, or the different reconciliation files and settlement processes that the banks use, without having to worry about security and all those things. So essentially, as a payment provider, you make sure you have all those technical connections to those payment methods. Of course, you have your legal contracts with them so that you can actually resell it. Quite often you collect the funds as well, and you work with the reconciliation, and that's the service that you provided. So I did that for a couple of years, and then my old buddies from the Bibit time, essentially they called me and said, "Hey, we're building something new. We're talking about 2009 and 2009, that was Arjen. So I joined Arjen in actually quite a similar role. So also the COO and responsible for the financial strategic partnerships. And 2009 was a bit an interesting year because in Europe a new financial regulation was introduced called the Payment Service Directive. And that was intended to create an equal level playing field between banks and all these payment players. And I think that from a regulatory point of view, it was good because, of course, you had a lot of cowboy-like companies who didn't know, or they might know, but didn't implement it correctly. So there was no enforcement for that regulation. Also, the banks like that because they felt it's not fair. We are being regulated quite heavily, and we've got a lot of FinTech companies who don't get any supervision at all. But the flip side of that is that because of that regulation, these type of companies would be able to perform more tasks in this financial landscape. So within Arjen, we said, okay, instead of working with a bank to buy in our Visa and MasterCard transactions, we said, okay, why don't we become an acquirer ourselves, talk directly to Visa and MasterCard and get our own license from Visa and MasterCard. And that's essentially been one of the larger projects. I've done many projects, but to convert Arjen from being a payment service provider, buying in their Visa and MasterCard transactions from the banks, to actually buying them indirectly from Visa and MasterCard, which includes a legal aspect, operational aspect, but also, of course, quite a technological aspect because you're sending transactions straight to Visa and MasterCard systems instead of to the bank system. So this is called the processing of those transactions. The license is called an acquirer license.
Mm-hmm.
And during my years at Arjen, besides doing the operational stuff and all the other payment methods, definitely in my later years, I've been focusing particularly to convert Arjen to become an acquirer, a processor, not just for Europe, but also across the globe for Visa, for MasterCard, but you can imagine also for American Express, UnionPay, JCB, Diners, Discover, all those international cards, and a number of the more domestic cards.
Interesting. Fascinating. Tell me a little bit about, that's a huge portfolio. I want to know a little bit more about that in depth. So talk to me, when you started out, all those years ago, I think you said 97 when you started out.
Yeah.
What was the goal for you then? Could you imagine then that you would be where you're sitting now? Was this always the goal?
As a person or with all those companies?
With all these companies' experience and the mission you're having in life.
Yeah, well, the mission has always been sort of to change the world as it was. So to disrupt essentially the world. We felt back in 97 that the banking industry at that moment was quite old-fashioned. And of course, they're large companies, so they don't have the flexibility. But that as a smaller startup company, you could operate much quicker. You could deliver products much quicker, etc. So we said, okay, listen, we want to bring this innovation to our customers, which on the one side are the retailers trying to sell something, but also, of course, the people who are buying something, they also want to have a good working product if they want to make a purchase. Essentially, payment is quite essential. You expect that it works if something else happens. And we felt at that moment that the banks essentially were not innovating quick enough. We thought we could do it quicker. Well, that's exactly what happened. And to the degree that actually hasn't changed. So there are still so many optimizations that you can do. Of course, everybody in the whole ecosystem has evolved. Banks have evolved, but there are still many new fintech players still trying to make things easier. And the main reason is, of course, that if you're a smaller company, you can develop usually quicker than if you're a very large company. And in most cases, banks are either quite large themselves or they outsource much of their software development. And that is, I think, an interesting era to be in for us, definitely. Markets and essentially that is our advantage. We can do much more, much quicker with the latest technology and deliver fantastic products for the whole fintech ecosystem. So that's always been sort of what we wanted to drive innovation, making it easier to pay, making it simpler for the retailer to accept payments, and making it easier for the consumer to actually make those payments.
It's definitely a trait all kind of entrepreneurs, C-level people have, because disrupt the system as it is. This is something that you hear most of the time, and that's completely, obviously, that's an entrepreneurial mindset. Tell me, with that, regards to Google, especially in those kind of earlier years, at least, of Google, What was the experience like working for Google? And was it so amazing, as everyone says? Did you get something kind of from it which you can't get from anywhere else?
Yes, it was as amazing as everybody told. So, and that is on different elements. So the culture was fantastic, and that is like the people you work together during the day, of course, but you also have a lot of fun in the evenings and in the weekends, and you go out with drinks together. And that's because it's forced, because they're just fantastic people to hang around with, and that applies to all the levels of the management. So it was the time that Larry and Sergey actually came to the parties, and you can have a drink with them, and yeah, so they would come to the office. So there was a lot of. The other thing is that also at Google we were pioneering at that moment. So definitely in my region, the Netherlands, in 2006, many of the larger retailers, they did not really have an internet strategy. And of course, I knew quite a number of retailers from my previous jobs at Bibit/RBS WorldPay, because you're also working with the retailers, but you're particularly working with those retailers that already invented e-commerce, because we were mainly servicing those e-commerce players. But we knew, of course, or I knew with my payment history, that there were many retailers who did not really have an e-commerce strategy. So you learn a lot by working with those retailers. You understand their business model. And then sometimes you sort of kind of have the feeling and say, okay, they're making the wrong choices. This is not good for that retailer. They're missing the boats. They're not seeing what we wanted to see them. And let's be real, some of those retailers, they don't exist today. But it's also been an enormous, fantastic environment to learn, to meet fantastic people across the globe, essentially, to travel, etc. So yes, it was fantastic. On the other side, me coming from a very entrepreneurial background at that moment, so while having all the startup experience with Bibit and also to a degree with WorldPay, of course, RBS is slightly different beast. That's a huge organization. At that moment, Google was already quite a big company for what it was not really the startup. I mean, each country organization you can still see as a sort of startup. You have very little influence. I had very little, or the Dutch team had very little influence on the actual technical roadmap, for instance. You can provide some input, but then somewhere in Dublin or the States, and then you might see if something gets done with it. So
really interesting. Tell me that. So out of two more questions before we go on to Silverflow itself, to go into it a little bit more detail. Out of all your roles which you had before, out of all the experience which you gained, what was the most monumental and the most the best experience which you've gained, which you were using today?
Yeah, I think that probably must have been the total time that I sat with Arjen. So of course, Arjen is a great. It's a big company. It's a great company, but also quite a big company by now. It's not really a startup anymore. When I joined, we were like with 14 people. We were unregulated. We sort of were trying to make the next thing, the things we wanted to finish with Bibit. We said, okay, let's finish them here. But if you see what tremendous growth in all aspects they've gone through, from being a payment service provider to becoming acquired, to become a bank, an issuer, stock listed, and I was not involved in all of those things. But I think, you learn an enormous amount of starting at a company very small in a leading position and helping to grow essentially that company. And it involves all type of things. HR, always a thing, but also internal communication, external communication. You get all type, and definitely as a COO, you're in the end responsible for pretty much everything that goes on. So you see an enormous amount of things that go, fortunately, most of the cases very well, but also the things that don't go very well. And then particularly if you combine that with sort of rolling out this new product called acquiring and processing across the globe, you have the opportunity to actually travel across the globe and set up new entities everywhere across the globe, and getting regulations across the globe, talking to Visa and MasterCard across the globe, and then other cards and stuff like that. So I think that I've learned an enormous amount of things in the broader sense of scaling up, managing a company, starting small, and actually quite a large company when I left. So.
And tell me, so when we look at countries, and different countries' kind of attributes and personalities and how they work. So if I was to take, for example, I'm from Britain. We are a Ukrainian company, so we're based in Ukraine. But British people are very much kind of, solid face. They tell you what you want to hear, are very happy kind of thing. Americans are very, let's do it. What would be the Netherlands approach?
We're quite direct. and that can come across to particular, well, I would say more sensitive cultures like the British. They will never be very straight in your face, but it's similar to French cultures or quite often Asian cultures. If the Dutch don't see this working, they will tell you in your face, say, well, yeah, I don't see this working. We should think of something else. Where the British might say, well, let's consider some other options. This is a good option, but I'm pretty sure there would be better options. Dutch would just say, okay, cut it out. I don't think the solution is here. We need to think of another solution. And that directness is something that is seen as typically Dutch. It's not intended to be rude, but this can come across a little bit rude to other cultures. So sometimes you can use it in your advantage because you can sort of, tell things a little bit like the Dutch thing, although you know that it might be a bit sensitive in that particular culture, and they can always apologize. Oh yeah, sorry, yeah, that's my Dutch thing, so I shouldn't be that rude. But it helps you. Then people indeed start laughing and say, okay, but I get the message. So it can also help you. But I think that Dutch have quite a no-nonsense, direct, straight to the point way of communication. And that we think it speeds up things. And others think, well, yeah, but you're sort of missing out the politeness around this. But
I guess that's actually very similar to the Ukrainian kind of approach. They're very much the same to the point. And when I first moved here quite a few years ago, I thought, whoa, okay, that's definitely not how we do it, but interesting because it is getting to the point straight away. Robert, tell me a little bit about Silverflow. Let's go straight into it. So tell me where the idea emerged from. How did you come up with the idea?
Yeah, so the idea is actually back in the days at Argent. So at Argent, we were getting our own licenses from Visa and MasterCard. Well, getting your license is a contractual process. You have to show that you're ready from an operational and compliance and a regulatory aspect. So you need to deliver a certain number of documents. You need to do some other things and give, at a certain moment, you get this license. But the license is nothing more than a contract, so to say. So you get your number on paper. Then you have to search, how will I technically send those transactions to the card networks? That is what's called processing. And we were quite familiar with a number of the processes that were there already, because this is not something that is new. But what all the processors have in common, and those are still the larger processors today, is that they back to the 80s, sometimes to the 70s. And over the last decades, they've made a number of acquisitions and sort of tried to upgrade their system. But essentially, if you look at the root of their system, quite often you will find COBOL code running on IBM mainframes. And probably if you search for COBOL job, the chances are quite high that you end up at one of those companies. So at Argent, we looked at all of them and we said, okay, we don't see what we want. None of the existing companies provides what we want. So we build it ourselves. And that was also part of my team that built it ourselves. Well, flash forward to what Silverflow does. We think that many more companies, such as Argent, so think of payment service providers who get mature enough at a certain moment, have sufficient volume to actually have a direct contract with Visa and MasterCard, that they will be in a similar situation. So yes, they are applying for their licenses. They will get it if they, let's say, are mature enough. Then they will also have to, as part of that project, have to think, how will I technically connect to the card networks? And to a degree, they have the same choices. So choice one is to go with any of those old-fashioned systems. And they're the same that were there 15 years ago when we made a decision for Argent. They could also build it themselves, of course. But building it yourself is not as easy. And there are a few examples of other companies who've tried it and say, okay, listen, I can get the basics working. I can get that done in 2, 3, 4 years or so. But if you really want to have an advanced product, it will take me 6, 7, 8 years. And actually, it's a continuous way of developing that software. So many of the companies say, okay, that's quite a big investment to build it myself. And we want to add a third flavor, a very modern, state-of-the-art card processing platform. And that's what we've built. So we said, okay, listen, we want to have financial companies who want to upgrade the way how they accept Visa, MasterCard, and other card transactions. We help them, and we do that by giving them very simple APIs. So it's simple to connect with us in the first place, to go live. It's also simple to do your daily operational activities. We want to provide them an enormous set of data. So it's not our data, it's their data, including the analysis. But if they want, they can get the raw data as well. And we want to make sure that we get, let's say, the highest set of functionality that is available within this space. And that is something that is constantly changing because, these card networks, they innovate themselves as well. And we're the only one across the globe who do that. So if you look at our landscape, there are a number of companies dating back to the 80s, the 90s, but also to the 70s who sort of provide this service. Quite often they're quite complex companies to work with, both from a technical as well as an operational, as a legal, as let's say, day-to-day role. That's option one. And then more or less the same. Option two is to build it yourself, which no matter how you put it, is complex, will take a number of your developers for a number of years, it will be expensive. And option three is essentially a modern platform, and we're sort of the only ones in our kind there.
Tell me then, Robert, how does Silverflow's cloud-based approach, how does it help bridge the gap between payments and technology, both for current needs and future requirements?
So, of course, there's always a discussion, will you develop this in the cloud? Well, that is very modern, but there are also a number of advantages. So, having it cloud-based, first of all, you can use the benefits of all the tools that are already there in the cloud or prepare for the cloud. So, I think of specifically scalable databases or HSM, which are used for encryption in the cloud. You have PCI in the cloud, lots of log management, role management. So that is a reason why you sort of say, okay, it helps me to develop my software quicker because we don't have to reinvent the wheel all the time. The other one is that it makes it, for that reason, also very scalable. If we want to add storage, we don't have to go to a data center to add new database servers. We can just buy it in the cloud, and many of those things you can do on the fly. And the same applies for the number of transactions per second that you can apply. We don't have to install new hardware. We just have to configure more database interactions per second, essentially. So the scalability issue makes it much easier in the cloud. But there's another argument, which is geographic scaling. What you also see is that more and more countries, they apply, for the right reasons probably, more rules around privacy and data protection. And payments is one of those areas where this is extremely important. So quite often, if you talk about data protection, people are looking at the privacy of their payment numbers. And that could mean that some countries say, okay, listen, we want that our data is processed or stored in our own region. And we see more countries across the globe doing that. So for us, it makes it easier to set up on separate installment in a domestic cloud region for our cloud providers than to open up a physical data center. And that makes also a difference between ourselves and many of the old-fashioned players. The old-fashioned players, they have these big data centers with all these nice IBM mainframes crunching numbers all the time. But if they would want to open in a new region, they sort of have to replicate that whole hardware instruction. And we just have to load a software instance in the domestic cloud, which makes it much easier for us to expand to other markets, other regions, even if they have like these different restrictions on privacy and data storage, etc. There are a few caveats, of course. There must be a cloud service available in that particular country. And the financial system must approve financial software to run on the cloud. But most of the clouds, they are getting more advanced in that and actually having their own FinTech or banking team, or how it's called, to make sure that local regulators approve the use of domestic cloud service for FinTech products.
That's a huge mission. And I've seen on your website as well, you've got quite a big team now, quite a big advanced team. How big's the team?
At this moment, we're with 59 people.
Okay.
And they're spread across Amsterdam, London, and the US.
Nice. How much has that grown within the last year?
Well, the last year, it didn't grow that much. So, but over the last 1.5 years, it grew with probably 30 people or so.
Oh, wow. Okay. For
last year, we sort of we went after our last funding round. We recruited quite a few people in this first half year after that. And then we were at sort of the team that we wanted to be. And we've kept that very stable. We didn't lose anybody. We had a few additional hires to fulfill additional positions, but that was on purpose.
So with this mission, obviously being a big mission, what has been the most challenging technical part which you faced so far?
I think getting certified. I mean, people think it's okay, you're building a piece of software, but what you really have to realize is that if you're working with, let's say, large companies such as Visa or MasterCard, and particularly because we're not a customer of Visa, MasterCard, we're not, let's say, one of their members, we're not an acquirer ourselves, we're just providing technology. You cannot put a product live if it's not fully certified. And you cannot sign a customer, a bank will not sign with you if you don't have a certified product. So the challenge in our case was we need to build a product, we need to get it certified before we even can make any proof point that it actually works in real life, because none of your customers are going to sign with you if you don't have a certified product. Well, the certification itself is a challenge, because there's not one certification. It's sort of a combination of all different type of certifications for individual small products, but also, for instance, for security. So think of PCI security to store your cards, or SOC 2 compliance, which is more the audit standard. So you need to do a lot of technical and security and operational certifications before you actually have a product to launch. And that essentially means that you need to build, certify, etc. for a couple of years before you actually can sign your first contract. And that is, not so much the technical challenge, because if you know what to build, you can build that, but it's an organizational challenge to make sure that you try to do that in as short as possible process. And at the same time, also, of course, if you start up a company, you also need to keep an eye on your customers. You want to have sort of customers that you can sign up once you've spent that couple of years in building a product.
Yeah. Robert, tell me, with regards to the fintech industry, obviously it's had its highs over the last few years, really over the last kind of 8 to 10 years. Where do you feel the fintech industry is now going? Is it still on that high? Have we reached kind of a level kind of playing field now, or are we still going up?
My view is that next year there will be more payments than last year, and in 2 years there will be more payments than next year. And there are a few reasons for that. Probably if you look at yourself, your own age, you probably make more transactions this year than last year. And there might be smaller transactions. It might be your watch making their own transactions. It might be your television making their own transactions, etc. But that applies for you. It applies for me. It also applies for my parents who are in their 80s. They make less transactions than I do, but they do more next year than last year. It also applies for people in, let's say, less developed areas. They think of the whole of Africa. They don't do too much transactions this year, but they will do more transactions next year. And this applies whether it's a mature market, you will see that there's still expansion in the number of transactions. And also if it's an immature market, if it's older people or younger people, all of them will do more transactions next year. So I'm quite positive on the fact that there will be more transactions, and that the systems running these rails for these transactions, they will make benefit of that. And the peak that you're saying is more from a valuation. So of course they peaked in terms of valuation and multiples, let's say end 21. Fair enough. I'm not 100% convinced that let's say the decline in valuation purely has to do with the fact that they're fintech, because all tech has declined. That's more macroeconomic effects probably which push down the valuation. What I do think is that within fintech, there are a lot of companies who are sort of copying what others are doing. And at this moment, if let's say the multiples are a bit low, if the investment appetite's a bit more, slightly less appetite for the fintech, that in order to build a good company, you really have to have a unique product and not just a Me Too copy. And if you have sort of products where there are other companies in the similar space, you have to grab that number one position in a region and preferably across the globe. And then you still have good valuations. But if you're sort of like the 10th company building product X in fintech and having a market share which is not in the work or so, then it will be difficult to get funding. But I think it is also correct that there's a little bit more conscious decision on the valuation, because some of them indeed were quite crazy.
Absolutely. And last question for you here. So tell me, in regards to your success for this year, are you happy with the success this year? Yes or no? Why?
Yes, we're very happy with the success this year. So we set ourselves a number of targets, what you should do. And there, of course, in terms of the product itself, what is the product that we deliver? In terms of the customers, so how many customers, but also how many transactions is an important indicator for us. The type of customers, we had targets around geographic expansion, so which markets do we want to be present, and a few other ones around the team, the seniority of the team, the stability of the team, stuff like that. We're actually exceeding on pretty much all of them. And there are one or two where, it might be a bit tight whether we will exactly make it or not exactly make it. But I think overall, if you sort of set your targets for the next year and if you exceed it, that's great for us.
Robert, give me the last bit for our audience to remember from this interview. If you want our audience to take one thing away from this interview, what would be your advice, or give a shameless plug? What would you like them to know?
I think I've plugged enough about Silverflow that we're unique. So I think if the audience are mostly people building up a company, try to make sure that you're building something unique. Try to make sure that what you do is different compared to your peers, your direct peers. Know who they are, but still make your own plan. Don't try to copy them. Don't try to follow them. And I always think it's a good idea to really work on pitching to investors, because sooner or later you will need them. Make sure you find the right investor for the product. Make sure you have a good relation already with them before they actually invest, that you know how your day-to-day or your week-to-week or month-to-month cooperation with them will be, and also what they give you besides the money. So can they give you introductions to their network, to other portfolio companies? Do they give you specific advice on expansion in other markets, or legal advice, or HR operations? But try to look, when you're looking for an investor, not only for the money, but also what else they can bring for you.
Absolutely, that shoulder to cry on, but not quite literally. Robert, thank you very much for coming on today. It's been great to pick your brain. Wish you all the luck, and we hope to speak to you again in the future with results and statistics going sky high.
Thanks, Matt. Interview.